I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today it feels like there was a lot of enthusiasm going into the open. We were clear, we were basically close or opening above in the SPX. The pivot, which was like 1557 to 1563. And I think that was actually earlier. That was like 7 a.m.-ish. And then by the time we were sitting at our desk, and little by little, the market started to fade a little bit. Some people think it was because some guy in Holland said that this is a precedent, or someone else. I don't even know which guy said it. Or it could be the fact that market wasn't ready to break out and make 2013 highs. I wasn't expecting this type of sell the news or failure, but I also wasn't going in with guns blazing because I was like, I don't see any sectors breaking out the highs. We talked about the home builders that have been kind of leading, but nothing else has shown extreme power. I had like nothing that I was like super excited about coming in and buying, and then lo and behold, you trim some stocks into strength. Okay, and then all of a sudden things start to fade, and then you take some off as they break intermediate levels, and then that's what you have hedges on, shorts on, and whatever. So I'm just going to run through a lot of charts and a lot of scenarios. So here's the SPX. So what you see here is the two trends. This was that red dog reversal that led to what has been a really long, nice move. Okay, this is your gradual trend that was only tested once right here. And just to show you accelerated trends, because this is really our sweet spot as traders, I tend to be able to own, a nice portfolio approach when the accelerated trend line holds intact. When we're above the 8 and 21 day, and into this move lower, I probably got lighter and went down to less positions until we finally reversed, and that was the fiscal cliff. And then here was another accelerated trend. Okay, making it pretty easy or easier to hold 8 to 12 to 15 positions during the course of this trend. And then when this accelerated trend breaks, which right here we broke below the 8 day, then you had a small bounce to then just slice through the 8 and 21. I know this got me out of most of my risk. You never know where it's going to go to. You don't know if it can even get down to the more gradual trend. So then here was your reversal, and it wasn't a blaring signal to get fully long again, but then this was your signal once we held in this choppy area to put some longs back on for the potential break above 1530, and that's what happened here. So today's question was, how do we handle 1557 to 1563? Do we break through it and close above it and get momentum, or do we kind of fail at that level? And I wouldn't say this was a complete failure, but we couldn't hold the level. So if you were putting on longs to ride what could be a momentum move above recent highs, you had to take them back off because it didn't happen. And if you look at one more accelerated trend, here you go right here, and it's somewhat broke with this little pullback to the 21 day, and now it's pretty mishmashy. So I would say at this point, here's your important level. This previous low here was 1538. I guess if you want to cheat a little bit, if we start to break below 1542, who knows? Maybe we get some more weakness to test a 50-day or test the more gradual trend, which we haven't seen in a while. So it's just a little bit of a testy area. So with that said, some reasons why you would be a little risk off would be that there really isn't that many breakouts. Okay, Visa is very strong. Look at Visa. We talked about it, I think this morning, or at least on the desk, where you had a really nice chart pattern. A break above this 160 could give you a clean breakout, and that closed in the highs. It didn't care that the S&P didn't. MasterCard traded through a small level, but it's not ready, to get going. Plus, a lot of people have a harder time, I think, trading it because it's a $530 stock or so, actually $519. But anyway, here's our level on MasterCard. But when you looked at the banks today, okay, we come back to me, the banks got a little weaker and some of them went red first. And we talked about how Goldman Sachs has been a little bit of a red flag. Ever since the stress test, it hasn't been the Goldman Sachs that led the bank move, into the end of the year. If you remember this move, this was a brilliant move by Goldman that led a lot of the banks. All right, it started, I would say it started almost right here. This is when this was your core entry, or maybe in 2013 when it gapped up. But then look how this accelerated trend that typically is easier for traders like myself to stay with, when it broke. This was your way out. I think some guys even got short on that break. And then here was your wide range potent bar that reversed with the market after the Italian elections, came back, made a lower high. And then this was your cheating spot. This was, okay, Goldman Sachs, if it's going to be strong, shouldn't break 150.50, and it did. Then it broke the 8-day, and then today, it's now hovering below it. So, that's somewhat of a warning sign, okay? And then you want to look at other warning signs. I'm not going to get through all the other banks, but in tech, Apple's been a really nice trade, okay, a lower level bounce type trade that's still showing some commitment. I'll go to Apple first just because everyone likes when I talk Apple. Overall, remember this high and then the descending channel. So for me, I like Apple when Apple has some type of pent up pattern, okay? So when it were to trade above, this 439, 440, this to me was a pent up pattern. Okay, this 2-day move, that's what I like. I like to grab those type of 2-day moves. That's when I probably have the most of my size in it. And that's why I chose to do a call spread into this 2-day move. And then it held higher, went back and, I held some common. And then through the 50-day, I figured to get another 2-day pent up move. Okay, so with that being said, thank goodness for the site. Okay, I'll give you a shout out if you come back to me. I had the call spread, and I was thinking, look like the last one, the 435, 445, I might as well just sit in it. It'll be fine. Let it expire and get the full-fledged value of it. And then today, I'll give you Britch. He was, he's on our site. That's why we love the virtual trade floor. We have an awesome community where everyone gives information based on what they're seeing. The value of the virtual trade floor is not just the content providers like me or Mark or some of the other ones in the other rooms. It's the 300 plus people that are in there all day long chatting, saying what they see, pointing out strengths, weaknesses, charts. It's real traders that if there's 300 plus in there, that's 600 eyeballs. It's better than the two, better than my two. So anyway, he's really good with options. He's like, Red Dog, I know you have the weeklies. We don't have a lot of time. What if it just goes back and forth above this range? So whatever. Took the call spread off around I think 468.50, 469. That's when I left the virtual trading floor. I actually sent a tweet saying I managed my call spread since I didn't have a lot of time, and it wound up being a decent sell. Okay, I think that we were risking 2.5 to make 6 and change, and I think I made a little less than that. The other call spread we were risking 3.5 to make 6 and change. So nice little option strategy for someone that doesn't typically do options that much. I usually am just trading the equity, so I'm trying to put more tools in my tool basket, same way you guys can. So anyway, you go back to the chart of Apple, and you have a slight reversal. Tried to be stronger than everything else today. I do think that there could be a retest again of this 50-day moving average, which is like 458, and if it holds that would be a spot I think you could rebuy if you sold some strength. Everyone could also be being a little cute, where if you try and be too cute, all of a sudden they come out with their dividend and their buyback announcement or something like that, and then you don't own it, then you're being too cute. So we'll see what happens here. It's above the 21-day, it's above the 8-day. On this, remember this day, you had you could have sold the up open and then bought it into here without having to sit through the noise. We'll see what happens this time. But overall, really nice calculated pent-up trade right here. Another one right here into the open. We were up decently, and we'll see what happens next. One trade that did get me that for some reason Google, I still can't trade it that well lately. I was long it from Friday into today, added to it, okay, thinking that today we'd be strong, and it broke above this little trend line and closed below it. Not a great add. That's a frustrating thing in this tape where you try and add to something and it's not working. Even if you just like if you try and press a short, it's not working. So anyway, I actually got stopped out of my entire Google, okay, because I had to stop in below Friday's low of 809.64, and it closed around there, but I'm out of it for now. So we'll see what happens in the next few sessions. If we can do it again, I thought perhaps it would change, maybe mark up, but again, it's still early in the week. But for today, it didn't trade with that momentum through a momentum level, so you leave that momentum tier. If you're still in it, long versus slow, then you're giving it some more room than I did. That's 801.47. And then you look at some other things that probably shouldn't be happening if we were in a strong tape or momentum / tape. Look at LinkedIn. LinkedIn got upgraded. It closed really strong Friday, and then it didn't hold half or a third. It gave it all back. That's frustrating. Frustrating. Look at that. It's still holding higher. It's still above the 21-day, but here's when, remember, Goldman Sachs upgraded, was sold. I actually was long into that. That's when I sold my LinkedIn. And then pull back, and then you had a nice little break of this little trend line here on Friday above 176.20, closed relatively strong, and then opened down and didn't find a friend. This thing should have held I would say 178, 180 if it was going to continue to perhaps make new highs, but it didn't, so maybe it just needs more time. But that's kind of frustrating in this environment. Same thing happened with that Netflix. Remember when Netflix broke above this key level, okay, which was a decent trade, gapped up. You could have bought it above this 186, and then the following day and pretty much matched it. That shouldn't have happened. It should have held higher, showing commitment. Instead, it didn't, and now it's just dribbling lower. It's still above, this major support, but now it's getting a little wishy-washy. This thing starts to break below 178 on some volume. You could get it. Maybe we can get a cute short down to the 50-day and still be, overall really well considering where it came from. But again, no momentum in momentum stocks is something that is a pain in the tush. And then you look at something where, two broken stocks, so to speak, that looked like they, were repairing themselves a little bit, like eBay. eBay, at least it was a little bit better that it had a 3-4 day move, so I don't think people were expecting much. You look at eBay and you could see how it's broken. It broke, this was your upper level area. I talked about having high level stops or intermediate stops. This was your high level stop. If you were playing for this to break out to the upside, it didn't. It broke to the downside. That was your high level stop. If you said, you know what, I'm going to give it more room, it's eBay. Here was your intermediate stop. This was a more gradual trend. When it broke this trend, that could have been your stop. So anyway, put in a low, bounced $3-4, and then today engulfed like 3-4 days of the action back below the moving averages, showing you it's a choppy mess. And if you stayed a little bit too long, but again, this is 4 days in a row, so I don't think anyone had probably too much size there. You got a little hurt. Amazon also, lots of different things going on here. This was when it opened up after earnings, couldn't break out, pulled in, little double bottom. This was a nice trade. It looked like it could have held into the upper range to continue, and it didn't. It broke below it on that downgrade. Then you had a small red dog reversal on Friday, and then today it was just weak. No follow through, no nothing. Went to this moving average, which I think is what the 8-day, and failed there. Didn't even have the strength to get above it. So I would say now the longer Amazon hovers below this area, the higher the probability that this could continue to the downside for a short. So again, I'm still looking at stocks that just aren't so good looking as far as from the long side, especially in technology. Hewlett-Packard looks good, and I'm short that one though. Hopefully, you didn't get too hurt in this one. At this point, it's definitely acting stronger. Okay, this is like a lesson, a good lesson actually. I turned a really easy or easier short when it did a red dog reversal, traded through this. I covered some here, covered a little bit into this, and then all of a sudden I was trying to be cute and I shorted. I was like, oh, you know what? I covered into 22.40. I could be shorting 22.60s, 22.80s, 23s, 23.05s, and I lost money in it today. Thank goodness I didn't, get out at the top, but because I was trading it, this was my stop, and it didn't trigger. So at this point, it's acting real strong. I'm still short some, and this will be my hard stop. If it opens above it, it won't be a fun day for me. But overall, showing really big strength. But again, from where it was, and I'm not even going to get into it. But so that's where some strength is in Hewlett-Packard. Go buy it. And then you look at something like BMW, even that had a really nice trade, and it shows you that if you overstay your welcome. Look at this nice wide range bar, boom, and then look here. Just want to show you guys. This is a micro red dog reversal. Okay, look at the size of the move it had from 70 all the way into the gap and reversed. That is your sell signal, and you never know what it's going to lead to. And that also, for some people who are looking to short into this big gap, that could have been your short setup. Traded through this high here of 85, 85.25. Okay, went as high as 85.91. When a recross there, that's your short. Here's your stop. And then, you know, if you just honored that stop, look at the size of the short you could have caught. Okay, or if you were to look for this kind of pattern here, that was your exit. If you're like, I'm going to ride this to see how much of the gap it fills until I see some kind of tactical sell signal, there it was in VMW. And now it still looks broken. What's Oracle been doing since that gap down? Look at that. Gap down, and then still continuing through the 200-day. Remember my 2-day, 200-day rule? At this point, you have a huge gap, and it's getting weaker. That's on the negative side, obviously. And then you have, let's see what IBM's doing. IBM, that's kind of, I can't say that word on the tape, but here is, you know, it looked good, looked like it was breaking out, and then gap down with Oracle, and then so like almost like an island top a little bit, but who knows, we'll see. And now it's still showing some weakness, hasn't been able to fill that gap, so you know, maybe it just needs time, but that looks like more weakness than strength. So, you know, coming back to me, I said to Brittany this morning, she's like, well, what do you think? I'm like, well, I'll let the market tell me. I approached today with 9 longs and 2 shorts. I'm like, maybe I'll leave with 14 longs and 1 short, or maybe I'll leave with 5 longs and 4 shorts. Well, I think I left with 5 or 6 longs because the action warranted getting out of some stops or stocks into some strength and with some high-level stops. So with that said, I'm going to give it some more room. So just say we continue to hold above 1542-ish and we go sideways and some stocks start acting better, like Visa, and things start to stabilize, then I'll get back to 8, 9, 10, 12 positions. Or if we take out 1542 or 1538, I'll probably add to my spider short, get net short like I was a few times today, and continue to trim some of my leftover positions, because what I'm looking at right now is I just have some leftover longs that don't look really great on a micro scale, but intermediate they look fine. So I'm going to keep some for a little bit longer to figure it out. So with all that said, if you celebrate Passover, happy and healthy to you and yours. May you find the Alfie Coleman, or at least your kid, so you pay him the $5. Anyway, and just today's Monday. Hopefully you didn't get blindsided by the news. If you were on the virtual trade floor, a lot of people were all on top of it. So that's when we add value, and you get value from the community. And we also try to help out in the Twitter sphere for those that don't, who are not on the virtual trading floor. But anyway, have a great night. See you tomorrow morning at the morning call with Brittany.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.